now we can find out easily that target profit is 2,500. Fixed cost is 1,300 divided by 0.758. What is the answer here? Sure. Answer is 5013. Which one is the closest answer here? Right? Now my question is even more simpler. Oh, sorry. My question is even more simpler is that we find out the cups. Cups are 3363, right? So 3363, these are the units. What is the sale price? 1.49. If you multiply this, your answer would be B. Because these are the units and this is the sale price, answer would be your total sales, total revenue. So let's confirm that 3363 multiplied by 1.49. 5010.87. Answer is closest to B. Right? Any confusion regarding these two quick checks? Camila, Alima, Crystal, Jackie,
No question.
Landry, can you hear us?
Yes, sir. Yes.
Leo, Minsu, Timei, Sunho, Stella.
Sure.
It's clear.
Okay, good. Now our sixth learning objective is determine the break-even point. So we already talked about break-even point in our last lecture, in which we talk about that if we want to find out the break-even, then break-even must be equal to your fixed cost, right? Let's talk about the formula here. Here we go. So we are going to have the same example in which the company is having 20,000 profit, 80,000 fixed cost, 250,000 total sales. The per unit segregation is that contribution margin is 300, 500 is the price of the bicycle, and 200 is the contribution margin. So let's talk about this. So in order to have a break even, you remember this formula? In order to have a break even, put your target profit 0. So essentially, same formula. We want to find out target units, target profit plus fixed cost divided by CM in units, right? Since special case of the break even is that we need to put target profit 0. So 0 plus fixed cost divided by CM in units. That is units that we need to sell. Simple. So you don't have to remember a new formula or new equation and new derivation. Just remember that, use the previous formula and put target profit 0. That's it. So if you solve for Q, answer will be again 400 bikes. Right? So this is also give you the formula method. It is the same one because target profit is 0. Right? And if you want to find out dollar sales, then just replace this per unit CM with CM ratio. Let's just look at that. They just want to confirm that. Yes. 400 multiplied by sale price of the bike 500. This is the 400 quantity, units, answer would be 200,000. There are multiple methods to do that, right? So formula method, just replace with CM units with CM ratio in order to get dollar sales. Simple, right? So many of the students, they are confused, sir, this chapter has enormous formulas and much more that. I always say that only one formula this whole chapter has, and rest of the thing is you just need to interpret, that's it. Now answer this question. The same question, that the average selling price is 1.49 and the variable expenses 0.36, fixed expenses are 1300, and they are selling 2100 cups each month. You need to find out break even. When you need to find out the break even dollar sales, does this matter? How much they are selling right now? No. So this is the extra information that is in this question. So whatever they are selling, they just want to know their break even. So break even dollar sales formula is, so you can see that BE sales are equal to, here we go, fixed cost divided by CM ratio, right? Our fixed cost is 1300 and our CM ratio was 0.758, if you remember. How we calculated that? CM divided by sales. CM is 1.49 minus 0.36 divided by 1.49, which is 1.13 divided by 1.49. Answer is 0.758 or 75.8%. Right? So what is the answer here? 1300 divided by 0.758. 1715. Do we have it here? Answer B. Right? Minsu, you getting?
Yes, yes.
Good. Sunho, William, fairly simple,
Yes.
right?
Yeah.
Okay. And let's talk about 7th learning objective, which is compute margin of safety and explain its significance. Let's just talk about that. What is margin of safety? Margin of safety is that how much you are above your break even. Simple. How much in terms of like, even in terms of units or even in terms of total dollar sales, right? So right now you are selling 2100 cups and your dollar sales, and your break even is 1500 cups. Then you are, how much you are in the safety margin in units? 2100 minus 1500, 600 cups. And if you want to find out the dollars, just multiply with the market price, that's it. So normally margin of safety are in dollars, but it can be in units as well. So don't limit your view regarding the margin of safety. Margin of safety can be in terms of units and can be in terms of dollars as well. So formula for margin of safety is that total sales, your current sales minus break even sales, that's it. So if we continue our RBC example, so how many units are they selling right now? They are selling 500 and their break even is 400. 100 cycles they are selling, they are above the margin and they are safe how much? 100 bikes. 100 multiplied by the 500 market price, answer is 50,000. Let's see that. Do you see here? Margin of safety, 200,000 minus 250,000. Answer is 50,000. So if we assume that RBC has actual sales to 50,000, given that we have already determined the break-even sales to be 200,000, the margin of safety would be 50,000. It's not about the margin of safety. It doesn't mean that the difference in profits. No, margin of safety is already, we talked about that, it's based on sales, right? How much above we are selling from our break-even. That's it. Any question, guys? And margin of safety can also be calculated in percentage. If you want to find out the percentage, margin of safety percentage means margin of safety in percentage is equal to your sales minus break-even sales divided by sales. Simple. The sales minus break-even sales, 50,000, 50,000 divided by 250,000. 20%. What this 20% says to you? That the RBC, how much is safe? Its margin of safety is just 20%. It is good or bad? Leo, Sipade, is it good or bad?
It's good.
Sipade, Crystal,
Yeah, it's good because it's above the break-even sales.
oops, sorry. Here. Answer is we don't know, because ratio problem is that ratio is used for comparison. It won't tell you it is good or bad unless we compare. If the industry average is 80%, then you are doing bad. Plus margin of safety, greater the margin of safety, greater the company is